Welcome to Breaking News to Trading Moves. Okay, so today we're looking at a pretty big announcement that certainly got some attention in the tech markets. It's coming out of JPMorgan, that's ticker JPM.
Right.
They've launched this huge initiative, Security and Resiliency, spanning 10 years. The headline number is $1.5 trillion.
Yeah, that's a massive number. Hard to even wrap your head around.
It really is. But the part that caught our eye, especially for anyone watching frontier tech, is this detail. Up to $10 billion of that is earmarked for direct equity.
And VC funding.
Right, direct equity and venture capital funding into U.S. critical industries. And they specifically called out quantum computing.
And that's the crucial piece. This isn't just, regular IT security spending.
Yeah.
This is venture capital. High-risk money, potentially high reward, allocated by a giant bank over a decade. That alone changes things.
How so?
Well, when a bank like JPM puts $10 billion on the table for integrating this kind of tech, the market takes notice. It validates it. We saw quantum stocks jump on the news, right? And investors see that and think, okay, serious capital is going to flow into this ecosystem now.
Got it. So our job today is kind of follow that money. We want to look at what this means for your strategy by figuring out who the direct winners might be.
The ones set up to get that capital.
Exactly. And the companies that help them, the enablers. And maybe just as importantly, which older sectors might feel some pressure because of this.
Yeah, where the money might be rotating away from.
Okay, let's start with the most obvious group, the pure play quantum companies. These are the folks actually building the quantum computers. They stand to gain from direct funding, maybe, but also just from the validation, right? Like JPM saying, this stuff matters for finance, for defense.
Precisely. JPM isn't just like buying off-the-shelf software here. They're looking for answers to really tough problems. Problems that regular computers, classical computers, just struggle with. Think optimizing huge trading portfolios or modeling complex financial risks, that kind of thing.
So who's first on that list?
Well, let's talk about IonQ. That's IonQ. They're a leader in trapped ion systems.
Okay, and what's the advantage there?
The big thing with trapped ion is usually qubit fidelity. Very stable, very accurate qubits. In banking, calculation errors can be disastrous. So that high fidelity makes them a strong contender for pilot programs, for proofs of concept, as banks dip their toes into quantum for really critical calculations like risk management.
Okay, high fidelity. How does that stack up against others? Because there are different ways to build these machines, aren't there?
Oh yeah, definitely different approaches. Take Rigetti Computing, RGTI. They use superconducting qubits.
Which is maybe more common.
It's another leading approach, yeah. They often focus on scale and speed. So you could see them getting partnerships or funding tied to hitting milestones like reducing errors while scaling up to machine size. Their focus might be better suited for, say, crunching massive data sets quickly, maybe less on the extreme stability needed for certain simulations.
Okay, so different strengths. What about D-Wave? They're kind of on a different path technically, aren't they?
They are. D-Wave Quantum, ticker QBTTS. They specialize in annealing.
Annealing. Explain that simply.
Basically, annealing is really good for optimization tasks, finding the best solution out of many possibilities. Think logistics, routing, or in finance, maybe optimizing trade execution. The advantage for them is that their tech is kind of closer to delivering real-world results now on certain problems.
Ah, so near-term applications.
Exactly. That gives them an edge for getting JPM funding for projects that show measurable results pretty quickly, alongside the longer-term research bets.
Makes sense. Now, the whole initiative is called Security and Resiliency. That sounds like more than just raw computing power.
Absolutely. It implies defense against future threats, too.
Which brings us to encryption, right? Quantum computers could eventually break current encryption.
That's the worry. The need for defenses today against future quantum attacks is becoming urgent. And that leads us to Arcret Quantum, ARQQ. They focus specifically on quantum-safe encryption. Their whole business lines up perfectly with JPM's focus on secure communications, making sure today's data stays safe even if powerful quantum computers arrive later.
Okay, so those are the core quantum tech players. But if you're a big bank like JPM, you probably don't want to build a quantum lab in your basement just yet.
Oh, probably not. Cryogenics and all that, it's complex.
So how do they actually access this tech? Test it out.
That's where the cloud comes in. It's the critical on-ramp for big companies.
Right, testing algorithms without massive upfront costs.
Exactly. You need huge resources, specialized environments.
Yeah.
But buying your own quantum computer right now, probably not feasible for most. The cloud lets them experiment, test things out without that huge capital expense. It de-risks the whole exploration phase.
And the big cloud players are all over this naturally.
Oh, yes. They've positioned themselves as the gatekeepers,
Right.
essentially. You've got Amazon AMZN with AWS Bracket. Many see that as maybe the easiest way for a company to try out different types of quantum computers.
Yeah.
Ion trap, superconducting, you name it, all through one interface. Super flexible for R&D.
Okay. And Microsoft.
Microsoft MSFT has Azure Quantum, their big advantage. Decades of relationships with large enterprises.
Existing customers.
Exactly. They have the developer tools, the ecosystem. It makes it smoother for companies already using Azure to start experimenting with quantum.
And Google, they have a strong research background here too.
They do. Google, GOOGL, with their quantum AI platform. They combine top-tier research. A lot of key quantum breakthroughs came from Google Labs with their cloud platform. It lets them offer trials, early projects, and kind of monetize their research muscle.
Okay, so cloud access is key, but someone still has to build the physical machines, right? And the specialized parts they need.
Absolutely. We can't forget the hardware side.
Yeah.
Building quantum computers needs components with precision that's, well, often beyond standard industrial stuff.
So this JPM investment could benefit those suppliers too.
Yeah, it creates demand down the supply chain, think specialized materials, advanced photonics, super precise lasers, extreme cooling systems. You look at a company like Coherent, COHR. They make photonics, high-stability lasers. Quantum systems need lasers that are incredibly stable, far beyond typical industrial use.
So high demand for that specific kind of high-precision gear.
Exactly. And IPG Photonics, IPGP, is in a similar boat. They provide high-precision lasers used in research, but also in the advanced manufacturing needed to actually build some of these frontier tech components. These companies are supplying, the nuts and bolts for this quantum push.
All right. Let's shift gears. If $10 billion is flowing towards these new quantum and security solutions, it implies that some of the older ways of doing things might be under pressure, seen as less adequate, maybe heading towards needing replacement.
That's a logical consequence, yeah. Money moving here often means it's moving away from somewhere else, or at least forcing upgrades elsewhere.
So where's the pressure felt most? Who needs to adapt quickly?
Well, the most immediate spot is probably the foundation of today's secure internet. PKI, public key infrastructure, and SSL certificates.
The things that verify websites and encrypt our data now.
Exactly. Think about VeriSign, VRSN. Their core business is identity and those certificates. They're now facing urgent demand for upgrades. Big clients, especially banks like JPM, will start demanding PQC-ready certificates. That's post-quantum cryptography encryption designed to resist attacks from future quantum computers.
And that's not a cheap or easy upgrade, I imagine.
Not at all. It's a major technical lift, and the client demand puts them under immediate pressure. That costs money.
And it's not really optional for them, is it?
Not if they want to keep those big clients. And this pressure extends beyond just certificates. Look at companies with broader, older security portfolios. Gen Digital, GEN, for example. They have a wide range of security products. They might need to seriously ramp up their R&D spending just to create and implement quantum-safe roadmaps across their offerings.
And faster R&D spending can hit profits in the short term.
It certainly can, if it wasn't already budgeted for at that accelerated pace.
Okay, what about less obvious areas? You mentioned infrastructure earlier, like data centers.
Yeah, this is an interesting one. It's not that demand for data centers will go down, quite the opposite. But it's about what kind of data center space is needed.
How so?
Quantum computing readiness can mean big physical changes. Some quantum machines need specialized cooling, like ultra-low temperature cryogenics. They need heavy shielding against interference, and they draw a lot of power in concentrated ways.
More than standard servers.
Way more, potentially, and in different ways. So for a data center operator like Digital Realty DLR, there's pressure on their ROI, their return on investment. If they're slow to adapt specific facilities, get them certified for these high-power, specialized quantum workloads, they could miss out on attracting those high-value, cutting-edge clients.
And I guess the race to upgrade affects everyone in that space.
It does. Equinix, EQIX, faces a similar challenge. Retrofitting a facility takes time and money, new cooling, power upgrades, maybe even physical security enhancements for sensitive quantum gear. That upgrade cycle might be longer than the time it takes for the demand to ramp up, potentially squeezing margins before they can fully charge for those new quantum-ready services.
Okay, one last area. When an institution like JPM puts a $10 billion flag down on strategic tech, focusing on quantum and security, what does that do to other tech companies vying for investor attention?
Ah, the competition for capital. Yeah, that's a real effect.
How does that play out?
It's partly market psychology, right? Investors love a clear narrative backed by big money. JPM's move creates this strong pull towards quantum and related security tech.
And that might pull attention and maybe dollars away from other areas that were hot before, like AI software.
It could, yeah. Take a company like C3.ai, ticker AI. They're in the important AI software space, no doubt. But investor focus can shift quickly. When there's this shiny new object quantum with billions flowing in, other software companies might have to work harder to keep investor attention, maybe show faster results.
So the bar gets raised for them.
Potentially. Same for BigBear.ai, BBAI. They might face a tougher comparison now. They'll be measured against these new, heavily funded quantum and defense tech projects backed by major players like JPM. It just raises the expectation for demonstrating value in successful pilots.
So it seems this JPMorgan initiative, while focused, definitely sends waves across different parts of the tech landscape. It highlights companies set to benefit directly, but also puts pressure on others to adapt or maybe compete harder for attention.
It clarifies the landscape somewhat, yes. Shows where at least one major player sees a critical long-term need. And on that note, we do have to remind you, this isn't financial advice. It's not a recommendation to buy or sell any securities. This analysis is purely the opinion of the author of the material we reviewed.
Right. And maybe a final thought for you to consider. If one huge bank is committing this level of resource to quantum over a whole decade, what does that long-term timeline signal for every other regulated industry? Think about healthcare records, supply chain security, logistics optimization. How might they need to adapt? Something to mull over. Thanks for joining us for this analysis.